This video falls somewhere between one of my normal 10-minute chats where I talk about broader aspects of trading such as the history of markets, the philosophy of trading and the like, and a market wrap where I look at individual trading opportunities. However, because I am looking at trading opportunities, I've decided to drop this in the market wrap bucket despite the fact that it does have some philosophical content within it. And one of the points I've been labouring of late is this notion of strategy beating tactics. Strategy is a higher order of thinking about problems. It is building a global framework from which you can then make decisions. Traders are often very good at parts of the pointy end of trading, that is, the analysis end, the drawing lines on charts. But they're often not very good at strategy. They're often not very good at being able to take a 1,000-foot view of a market and decide when to trade something or what to trade at a given time. Once you have that framework, you're able to begin to make broader decisions about what you want to do. One of the things I want to talk about was prompted by this little snippet that popped up in my newsfeed. It talks about the 7 biggest lithium mining companies in 2024. To be honest, I had no idea what the 7 biggest lithium mining companies are, which drove me to this point. I was curious to find out. I've noticed over the years that very good traders share certain characteristics. It is often said that very good traders have things such as self-control and discipline and emotional regulation and internal locus of control, elements such as those, and they are undoubtedly true. But I've also noted that very good traders are curious. They want to know things. They want to know how markets work. They want to know how they are assembled. They want to know what to do with the information they are receiving. I often say that trading is an information management profession. Unfortunately, nowadays we are buried under a torrent of information, most of it noise. However, very good traders solve this problem because their curiosity drives them towards data. Once they've started to look at something, they want to know why, and the only thing that can tell you why is data. You need to be led to where the data is taking you. Unfortunately, and this will sound somewhat harsh, the majority of traders are lazy. They simply want to push a button and hopefully have money pour out of the screen, because that would circumvent them having to do any work such as looking at raw data, such as exercising their curiosity. People generally prefer to be told what to do rather than think about what to do for themselves. But the other issue is that curiosity drives creativity. Trading is a creative endeavour, believe it or not. You have to work out ways of doing things. Let me use an example. An example might be that you are interested in a commodity, but you are uncomfortable trading commodities directly. Therefore, you have to find an analogue. You have to find something that represents it. For example, you might notice that one of the precious metals like platinum or palladium are doing something, but for various reasons you don't have access to trading the underlying commodity. You therefore have to find an analogue. Your curiosity has driven your creativity, which has created opportunity. The moment you have opportunity for profit. But this requires work, and it requires you to adopt a slightly different mindset. So this original article about the 7 biggest lithium miners prompted my curiosity, and it prompted my curiosity about lithium prices. One of the points I've often made is the difficulty that traders have separating the present from what is legacy or history. Often traders will look at a stock that has had a power run in the past, and they will buy that stock based upon the assumption that just because they have bought it, that power run will repeat itself. We have seen this with lithium-based stocks. The lithium boom was 2019 to 2021 thereabouts, and that was it. Then it ended. The majority of lithium stocks that did extremely well during that period and were once the darling of the market are now the dogs of the market. However, what is interesting about markets is that they are in a state of flux. They're in a state of change. And again, we come back to this notion of opportunity. Change brings opportunity. And it does not mean that things cannot repeat themselves and that moves cannot repeat once again. We've seen, for example, in gold, several individual bull markets over the decades. Just because you have one doesn't mean that you might not have another sometime down the track. But you need to be able to separate legacy from current and understand that there is a difference between the two. I did a little bit of Googling. Sadly, despite its looming economic importance, lithium prices are not brilliantly presented in any form of usable format. But this is one I often resort to, and simply because it is long-term, it's slow-moving, and that suits me. I'm not interested in the noise that comes from day-to-day movements in a commodity such as this. Bull markets are not built on day-to-day noise. They're built upon large secular changes. We can see of late there's been a little bit of a blip in lithium prices. And interestingly, when I was looking at this original article, I went through and looked at the charts of the stocks that they actually mention. And what I've done is I've broken them down into two forms. So I've broken them down into weekly and daily. I will go through them quickly because they all present an interesting similar pattern. In a previous video, I talked about the notion that when you look at an index or a sector, you have to understand that there is nuance within that sector, within that index, that not everything is the same. However, there is a caveat with that. And the caveat is that when you begin to look at a given market segment and you begin to see these same patterns repeating, you're being told something. The market is offering you a piece of information that you may take on board or discard. But it is an important piece of information nonetheless. So if we look quickly through these magnificent 7 stocks that they put up, we can begin to see a certain pattern. We see this congestion, but with a ceiling. Ceilings offer an opportunity because they're binary. Price either punches through or it falls away. And so if we drop down to daily, we simply see the same thing again. You will notice along the bottom I put a filter. This is a long-term filter. Part of the issue with traders is that they fail to understand what the long-term trend is. So if we go back, we can see the filter down the bottom. A weekly chart is for a position trader. This is someone who takes a position and he's looking to be a long-term trend follower. The rules of long-term filters are very, very simple. Green is good, red is bad. When it's red, you do not want to be a buyer. There is no possible reason for you to be a buyer. The same filter is stepped down to a daily time frame, and you can see the same thing again. Green good, red bad, but the time frames are compressed. You can begin to see that there is a pattern forming. These stocks have a ceiling. They also have a blip. And the blip is more obvious on the daily chart, but it is there nonetheless. This I would disregard, and it is here that we come to the point of discernment. Why would I disregard this? If we look at the name, look at the exchange it's traded on. It's traded in Hong Kong. This brings us back to the notion of curiosity. What has happened in Hong Kong recently? Well, Hong Kong and China have surged because of a change in monetary policy. So to me, this would be an artifact. I would be wary of this. Whereas the previous 2 examples look to be a true representation of the market, this might be a blip based upon a much broader change that has simply caused money to flood into the system. And the blip is really quite obvious when we look at it here. In a more established Hong Kong listed company, we see the same thing. We see this ceiling, long-term trend still down, but very large blip, again, problematic. When we look at something listed locally, such as Pilbara, I'm also a little bit, not concerned, but my observation would be that I would be aware of this being a function of a short squeeze, similar to the video I made a few days ago about mineral resources. And you can see that it has a series of gaps, but the background filter is still bearish. This is MinRes, which I've spoken about before. That large spike, from my perspective, is a short squeeze going on. This is simply sellers coming back into the market and having to close their positions out. I've looked at this chart in detail before, and you can reference that video and my thinking behind it. There's not a lot of data in Arcadium to make a judgment, but we do see this wonderful ceiling occurring once again. So if we were to make a judgment about the 7 very large stocks, the judgment would be that in general the long-term trend is still down. The short-term trend is showing something very interesting, and the market is telling us a story. The story is that the majority of them have a ceiling price. I said the ceilings were binary, and they are. Price either punches through and gives you a go signal or falls away and tells you to step back. Unfortunately, traders are often put off by support and resistance. They view it as some zone of death to be fearful of, when in actual fact it is telling you something extremely interesting and very important. If I take a step down in markets and I pay closer attention to our domestic lithium stocks, I took the notion of the 7 largest and mapped those again. I made the delineation based upon market cap, so that when I look at the performance of our 7 largest year to date, so this is a year to date chart, the performance by and large year to date has been quite ordinary, with the exception of Vulcan. But you will notice that I've dropped a yellow line down the chart. There is a point in early September where they blipped and their performance altered. And we can see this in greater fidelity when we shorten the time frame of comparison, and all of a sudden we see something interesting. We see that the performance in shortening the time frame has moved from universally negative to positive. This is undoubtedly reflective of the background blip in lithium. So if we go back to our global thinking, our curiosity has caused us to work down a chain of decisions, from looking at a simple article on the notion of what are the 7 biggest stocks with a write-up on each one, looking at what they tell us, and then moving down to what are the 7 largest local stocks and seeing what their performance has been like. We started looking at what their performance was like on a longer term time frame, but we've now compressed that time frame a little bit because we are looking for trading opportunities. Our next step then is to begin to look at the individual stocks to see if there is something occurring that is of use to us. Once we start to look at them, what I've done here is, you'll see there's a bit of information on the chart. There's a few green or red arrows and a ribbon along the bottom. This is my actual trading system for dealing with these sorts of stocks. The point I'm immediately drawn to whenever I'm looking at something is to understand what the background trend is, because that is a filter of all information. What is it telling me? Well, with Vulcan it tells me that in the late part of September it popped to be positive, that the market turned bullish. Same is true for De Grey, same for DVP, Same for Pilbara. MinRes is slightly different. This intrigued me. There is obviously squeeze going on. Price has jumped a lot. However, my background filter shifted from bearish to indecisive. My expectation when I first brought this chart up was that it would have popped green, but it hasn't, despite the movement. Undoubtedly, that's a function of the construction of the filter. There are times when it will not pick up quick, sharp changes in information. It's not designed to do that. It is designed to tell me what's happening quite slowly in the background. The same is true here. We've got this notion of a flip going on. So if we go back from the end of May, we have this extended bearish period. Prices collapse. Price then seems to churn and we move to indecisive, bearish, indecisive again. Every time you get a flip, what you're seeing is an argument between bulls and bears. There is this push-pull going on as they try and work out who's in charge. Eventually, whoever is in charge will become apparent. But at present, it is not apparent. This raises the question as to what are the local stocks telling us? From my perspective and my reading of it is that they are telling me that in the short term, for the majority of them, that you are getting interest all of a sudden again, which in turn drives us back to this notion of asking the question, well, what is driving the interest? And the interest is probably being driven by this notion of a slight pop in the price of lithium. So our market surveillance, based upon a simple article, has led us to this notion of looking at lithium, and again has dragged us down the decision-making tree to have a look at what's actually happening with local stocks. Does this mean that local stocks are a buy? Undoubtedly for traders, they have enjoyed short, sharp gains. But at present they are short and sharp. These are certainly not the moves that we saw in 2019. They may be relief rallies where you're simply getting a situation where the active bears are losing energy. They just don't have enough punch. And the stale bulls are still there, buying up, believing that history will repeat itself. Maybe, I don't know. From my perspective, it is more possible that there is this pop in the lithium price driving shorter-term traders. And shorter-term traders have a place within the market because they act as very good price discovery elements. They act as a surveillance mechanism. So what does this mean for traders? Well, largely what it means is that when we look at these stocks, and this is a former darling of the market, Liontown, that we still have this indecision. You'll notice these are shorter term time frame charts. They're not weekly charts, so they're not for a position trader. They are for someone who's short and sharp and who has a different mechanism of engaging the market. From my perspective, I'm not that concerned by seeing my filter switch to grey, because as I said, it indicates to me that something is happening. What is happening, I don't know, and will only become apparent if these trends switch themselves on over a long time frame. So at the end of the day, what does that really mean for us? Well, it comes back to another philosophical point I've often spoken about in trading, and that is that patience is free. Patience doesn't cost you anything. Occasionally, there may be an opportunity cost that you incur. That is sometimes a given because not every system gets every trade. That's impossible. The only way to do that would be to buy everything. The unfortunate thing with that is your performance then mimics that of the market. For the majority of traders who are successful, the notion of being patient is a cornerstone of their success. impatient traders tend to be very unsuccessful. So when I look at a chart like MinRes, which has had a nice pop over the past few trading periods, I'm not disappointed that I've missed it because my system didn't pick it up. I would be more disappointed if this changed on a weekly time frame, gave me a clear signal, and then for some reason I missed it or simply didn't take it. I'm much more comfortable just sitting there and waiting.